Hi everyone, let's go through my preferred scenarios on the high time frame, medium time frame and the low time frame, including potential trading setups. So on the high time frame, we're looking for a WXY with inside the X and ABC expanding flat that didn't yet reach its target, which is the white box over here. That is the most common wave C target between 27.7K and 34K. This would mean that now we are in a wave 5 to the upside after a 1, 2, 3 and 4, where wave 4 bounced perfectly on the 0.5 Fibonacci taken from the low of 2 to the high of 3 for a potential trading setup of entering here at the lows, stop loss at the high of 1 because wave 4 is not allowed to reach the price action of wave 1, and then trading it to the upside for wave 5. Now, important to note is the Fibonacci's here on the left side, as the red wave X usually has a minimum target of the 0.382 Fibonacci taken from the all-time high to the low of W, which sits at about 29.7K. Also, a potential short setup would be entering in this white target box. However, one should keep in mind that this here is also a rare wave C target with the stop loss that you're gonna set. Another nice confluence for this potential trade is the fact that this was a support area over the years, which would now then turn into a beautiful resistance area for more downside, where the trade that one can take can be traded to about 12.7K. The target of wave Y is, well, the minimum target is the 0.618, but there are other targets as well. However, the 618 over here has nice confluence with this backtest area that we haven't seen since the big bull run in 2020. So on the medium time frame, my preferred count is the following, where we finished a WXY in wave 4 over here, a 3-wave structure, which actually was very complex, but wave Y ending at the 1.618 taken from the high of W, the low of W to the high of X, which is a rare target for wave Y, after which we eventually got a big push to the upside. Now we start to get a little bit more structure on the lower time frames as well as now the medium time frame, where one could think, okay, a 1, 2, 3, 4, 5 is a potential. However, I think that the lower time frame count will provide you with a little bit more insight and also a potential trading setup, because so far, if on the medium time frame, it would be nice if price goes down at least a little bit more to get a better setup for a medium time frame trade to the upside, as still with Elliott waves one tends to trade the trends, and with our bullish high time frame scenario it would be good to look for longs in that case. No financial advice, but so yeah, this could be a 1, 2, 3, 4, 5. But then let's go to the lower time frames, because I think that is where the interesting scenarios are. So on the lower time frame, this is one of the scenarios that I have, which out of the two, which basically is a ending of the first wave in a bigger wave 5 over here. So then this is a 1, then we have wave 2, and eventually 3, 4, 5 to the upside. In this case, a potential trading setup is relatively easy to form, because the most common target for a wave 2 is the golden pocket over here, which has a nice confluence amount with the target box. And in the correction, that would mean that this is then some sort of an A, then a B, and then eventually a C wave to the downside. After which we can then expect more upside, of course, for the ending of wave 5. Another scenario is that this is not yet finished and we are currently in a blue wave 4. So then the high over here is 3, 4, and we expect one move up for 5. The invalidation for, I guess, this scenario is, well, the clear invalidation is going below the 0.5 Fib, as a wave 4 is not allowed to close or actually go kind of below the 0.5 Fibonacci. So the invalidation is here. So a potential trading setup with this scenario could be to do something like this, educational, of course. However, out of the two, this is my least preferred scenario. So my main preferred scenario would be this. I would like to see a bit more downside, a bit more of a retracement. Everyone that has been buying over here, you can see the volume spikes at the lows. Everyone that has been buying and buying and buying is then being baited over here, because we go to the downside, so they might be selling or stop losses being hit, and eventually we go to the upside once more. I think that would be like my ideal scenario, with then the secondary good scenario would be this one to reach the upper target box over here as well. Now if we then go to the very low time frame counts, I have 3 scenarios I like to show you. This one, I just want to show you. I know I said I'm going to show my preferred counts. This is not what my preferred count. Still want to show it though, where we said, okay, this could be an ABC in a worst case scenario, but the lower time frame counts do not support this. But it's just that could wave C already end, or could a potential wave 4 already end over here? And then now we're looking for a 1, 2, 3, 4, 5. I would say that is the lowest probability out of the 3 low time frame setups that I'm going to show you. So this is then the lowest probability. Then I think the potential, well, second lowest probability, but at least this is a alternative out of the preferred scenarios. This is the alternative one, where this is a 1, 2, then we have 3, 4, and we're looking for wave 5, where wave 4 hit the 0.5 Fibonacci perfectly, wicked inside, didn't go over it or close above it, and is now slowly moving to the downside. In this scenario, we would expect the downside to continue, and basically the invalidation of this scenario now for me would be to take this high once more at the 0.5, as then I'm pretty confident we are going to close candles above the 0.5. So that would be the invalidation at the moment. Potential targets for a wave 5 are, well, there's not great confluence in this area. The target box below for me is much better. However, if we have to say something, then we do have a couple of lows that can be taken, a little bit of a range, and we also have a time naked point of control at 23,250, as well as the range point of control of the higher time frame range that we are in at basically 23k. But that is stretching it. Like, this is the most common area for wave 5, and yeah, not too great of a confluence at that area. And then my final and preferred scenario at the moment is that this is a 1, 2, 3, 4, 5 in a wave A. Eventually we have wave B. Now all of these targets are valid for a wave B, but as mentioned in my earlier video, the minimum target was reached, which is the 0.382. However, this can as well be a first wave in a wave B, then we have a second wave in the B, and then we get a third wave in the B to reach a little bit higher targets before eventually downside in a wave C. I do think what is important to show you as well is we do have a daily naked point of control at 26k, which has a very nice confluence with the 0.786 as well. So in this scenario, depending of course how price is going to approach this level, a potential trading setup could be to eventually go into a short. Now I would like, if we go up, I would like the daily naked point of control to be hit. However, if we look at the golden pocket area, we also have a little bit of an order block over here. So an entry can be layered, like DCAing basically, and an entry starting at the golden pocket and then eventually to the upside. Stop loss above the high. Oops, stop loss above the high over here, which is the invalidation, and then trading it to the downside for a potential wave C, which gives a nice risk to reward. However, it all depends, of course, on how price is going to go to the upside, how impulsive it is going to be, because we also have news coming at 1:30 p.m. in 30 minutes from the moment this video is on YouTube, basically. 1:30 p.m. Central East European time, we have news. News means volatility. News also means, depending if price is going to push up crazy, then of course this is not a valid trading scenario anymore. Also, it's purely educational. This is what you can do based on Elliott waves. We're playing the probabilities, and this could be interesting. So yeah, let's see what in that scenario basically happens. And yeah, this is what I basically wanted to say. So please subscribe if you enjoy the updates. Thanks for watching, and I'll see you at my next video. Trade safe, and make sure to keep an eye on the news, because that is very often high volatility. Thanks for watching. Bye bye.